The night has come, it's cold and losing my control. Your light is gone, and lonely darkness fill my soul. I wish that you could save me from my isolation. It's way too complicated. Let's stop this conversation. Let's stop this conversation. We got no relation.
Alrighty then, alrighty then, alrighty then, alrighty. Wait, guys can't hear me, hang on. What the heck? Oh, you can't hear me? Sweet, okay, sick. Oh, what's up, what's up, what's up? How you doing? How we doing? How we doing? How we doing? How are we doing? Oh my goodness, chat. Holy. Holy. Trades by Judah. Hey, what's up? What's up? How you doing? How you doing? How you doing? Nothing much shaking here, baby. You know, just out here chilling. Out here chilling. Redneck trades. Hola. ¿Cómo estás? Joyce is in the building. What's up? How you doing? How we doing? How we doing? Holy chat. FOMC, baby. FOMC. My goodness. Things might get a little bit spicy, chat. Things might get a little bit spicy. Mr. Bonds in the building, ball gang here. Let's go, baby. Holy, we rocking the hat today, chat. We haven't rocked a hat in a while. We're gonna rock the hat today. Mama Bear, good FOMC afternoon. Well, good FOMC afternoon to you too. Ms. Venture, 0 trades today in any of my funded accounts. Holy, talk about just being patient and risk management. I haven't taken a single trade today either. Not planning on taking one, maybe later, maybe after FOMC. We do. Guys, we have a big old schedule today. All right. We have the rate decision. Okay. We have the rate decision. We have Mr. Jerome Powell speaking, which we're going to watch here on stream as he's speaking. And then we're going to hang out after market close here on stream because we have earnings today. We have, was it Microsoft, Google, and Meta today. So we have some big earnings. So we're going to hang out after this, after market close, and we're going to watch those. We're going to watch those earnings and see what we have going and what kind of effect those have on the market and see how they're doing, because overall it's going to affect the temperament of the Nasdaq, maybe for the rest of the week, maybe for the rest of the year, right? And so you can set a mood, right? And so we're going to watch those earnings after market close as well. And then later on this evening, chat, 6 p.m. Central Time, I posted, you know, we're going to be doing a free video series that's basically a free day trading course, and we're going to have it up here on YouTube. All of it's going to be absolutely free. You know what I mean? All of it is free. So, but we're going to do things a little bit differently. Instead of just uploading the recordings, right? Instead of just recording it on by myself here and whatever, we're going to do it all live here on YouTube. Okay. So at 6 p.m. Central Time, I will be live again here on YouTube, where we will do the first video of that series. Okay. So I would definitely, if you can make it, awesome. I would definitely encourage you to be here. If not, I totally get it. It's 6 p.m. Central Time in the evening. Some of you may got dinner plans. Some of you may have plans with friends, family, whatever. I get it. But we are going to do it live. Okay. And then obviously you're going to have access to all the recordings for those. They'll be uploaded. There's going to be a playlist on YouTube, chat. You know how you can go to like YouTube channels and view like playlists that creators create. We're gonna have an entire playlist dedicated to this masterclass. Okay, so you're gonna want to you're gonna want to check it out, or dedicated to the free course. And there's gonna be a ton of videos, chat. To be honest, I don't really have a set number of videos. We're just gonna keep going and going and going until we feel like we're just good. You know what I mean? So there could be 20 videos, there could be 50 videos, there could be 100. Right? We're just gonna keep doing these, and we're gonna do them live every time we do them. Right? It's gonna be good. And then also too, it's gonna be good for you guys to interact and ask questions during them. Right now, I will say I'm gonna want to get through everything that I want to get through on these, so that way the course videos are clean. And then after we do those, after we go through the entire video, then at the end of the live stream, I'll open up for questions like during that, and then you guys can ask all the questions you want to ask. And I'll get to all of them. So, but that'll be at 6 p.m. Central Time. So you guys get a lot of me today. Mom Bear says definitely get our Joey fix today. You are definitely getting a lot of me today. Part of the reason why I didn't want to go live this morning, because I was like, man, I'm gonna be like on stream all day long. But you guys have me on this stream until probably like 3:30 or so, 4 maybe. I don't know. It just kind of depends on like earnings and when they come out and what we see. And then you're gonna have me again for another hour at 6 p.m. So that's Central Time. So you're getting a lot of me today. A lot of me today, man. It's gonna be good. It's gonna be good. Also, chat, I ordered Chipotle again. Don't judge me. My dasher is on the way. I ordered lunch, ordered more Chipotle. Need to eat. You feel me? I need to eat. I need to eat. We do, chat. We got a lot today, man. We got a lot. It's gonna be a good one. It's gonna be a good one. You guys can see here we have the interest rate statement coming out at 1 p.m. Central Time, 2 p.m. Eastern, and then we have the press conference with Mr. Powell, Daddy Powell himself, at 1:30 there, or 2:30 Eastern, and then we have Microsoft, Meta, and Google earnings all in one day. Market's gonna absolutely go bananas, chat. Market is going to absolutely go bananas, and you know what, bro? I'm kind of here for it. You know what I mean? I'm kind of here for it, chat. I really am. Also, chat, did you miss the hat, Joey? You know what I mean? Y'all know I wore a hat almost every day. We haven't worn a hat in a while. What do you think? Bald or hat, chat? What do you think? At least it's healthy. Keeps your strength up. Yes. Double steak bowl. You know what I mean? Double steak bowl, all the protein. That's what we got. That's what we got. Double steak bowl, get all the protein in, you know. That way we get all the gains in that we can get. Chat, today is also arm day. We gotta go do arms and back in the gym today. I haven't been able to hit the gym yet. So later on, I gotta go do that. Kind of forgot about hat, Joey. Holy. A lot of you guys are saying, hat, what are y'all calling me, ugly? Y'all think I'm ugly, bald? Golly. Oh, chat, also, we are doing a giveaway today. We're gonna do a giveaway today. Less reflection, yo. Chat, do I just retire? Do I just retire after that, bro? I had to fill in for Miss K. No, she'll be here. Trust me, she don't miss. She gonna be here. That looks sharp, yeah. I've always looked good with hats on, but we gotta rock the bald look too, you know what I mean? Chat, did y'all trade today? I know some of y'all said y'all didn't. Did y'all take any trades? You think I look younger with the hat? Oh yeah, I definitely do. Couple of nice gold trades. Okay. Okay. Up 500. Let's go. You'll love to see it. What's gold doing? Let's take a little look. What we got? Gold is back to VWAP here. Kind of hovering the VWAP-ski. Hovering the VWAP-ski. I imagine things are going to be real nice and slow up until we get this rate statement, which we're going to be getting the rate statement here at 1. So in about 8.5 minutes, 8.5 minutes, we're going to get the rate statement. So that'll be an absolute heater. Mr. Bond, green on my funded account today. Holy, let's go. Let's go. You love to see it. You love to see it. Love to see it. Love to see it. Love to see it. Chat, Tradeify is 45% off straight funded accounts right now. Code JM. You know the deal. You know the deal. And if you do use code JM, be sure to send me a screenshot because that'll enter you for the 150K straight funded account giveaway. When you use code JM and Tradeify, you can have multiple entries, of course. Let me actually grab that graphic real quick so I can put it up on screen. Maybe. There. Maybe I'll do it. Hello? Okay, let's see if it'll let me drag. Man, what is going on here? Hang on, chat. Give me a second. All right, come on. Can't let me drag it. There we go. All right. There. Yeah, I can see Tradeify. 45% off right now on those 20Ks, 50Ks, and 100Ks. Straight to funded shot. Holy. So if you blow your account on FOMC, you know where to go. The Fed may also end today after 4 years in Q2. Wait, end QT today after 4 years, which is huge for the liquidity. QT, what's QT? 340 across 5 accounts. MQ, let's go. 1,500 today. Holy. I love it. You love it. You love it. Redneck got him one. Redneck sent me that DM using code JM. He's entering the 150K straight to fund account giveaway. Redneck's in there. Okay. Oh, Quantum Titan. Got you. Okay, now I got you. I was a little confused. Now I got you. Also, chat too. Tomorrow, Because I was really out of office, you know, just away on Tuesday, I wasn't on Tradeify stream yesterday morning as well. So I was just kind of gone. But tomorrow morning, I will be on Tradeify stream. So since I wasn't on yesterday morning, I will be on Tradeify stream tomorrow morning. So not on my channel. It's going to be on Tradeify's channel tomorrow morning. So that's where you'll find me. Holy. We got about 5.5 minutes until rate statement, baby. Rate statement, rate statement, rate statement. Holy moly. Made my first ever payout request today. About 4 months of learning futures and prop firms thanks to my dealer, JM. Holy. Can we get a screenshot of that comment? My goodness. Just screenshot that. You'll love to see it. GG's. Congrats, Redneck. Holy moly. Chat, I have a feeling that when people start going through this free course that I'm about to put up on YouTube, we might break the internet, chat. I'm not gonna lie, because I'm telling you that the material that I'm going to put in this course is shit that people charge thousands for. I mean, absolutely thousands. And to be honest, bro, I don't care to charge you guys about it for it, man. I really don't. So there's gonna be, to be honest, course creators might hate me for this one. They really might, but I don't care. It is going to be an absolute banger, chat. I'm telling you, like the things that we are about to put on the internet are going to be insane, bro. Insane. Like, actually, it's going to be insane. And the crazy part is nobody ever does it live. I'm going to do it live as well. Like, I'm literally going to do it all live for you. We're doing things different, chat. Listen, we are doing things very different than most. So if you're here, just buckle up. You know what I mean? Buckle up, because you're in the right place. You got it, Tim. Cheddar King. Hola, holy moly. Shawnee. Shawnee's in the building. What's up? How you doing? Shiny, shiny, shiny. Oh, yeah. Where's my Chipotle, chat? Hold on. My dasher is heading to me. Gabrielle. Should we give Gabrielle a free straight fund account for delivering Chipotle? Holy. It's date night with the wife. Going to miss tonight. That's all good. You'll be able to catch the recording. Don't worry about it. It'll be there. Where's date night at, Scorpion? What's the date plans? Give me some ideas, bro. I need to take my wife on a date too. What's the plan? Oh, there's Miss K. Holy Mama Bear, you don't gotta fill in no more. Miss K is in the building. Miss K has entered the chat. Great, thanks. Just got my kids sorted so I can come on. Well, I appreciate you getting the kids all squared away so you can be here. Obviously, I'm more important. The kids come second, I come first, okay? We're headed to an escape room in Hibachi. Holy, you love to see it. Hibachi's good, bro. I love Hibachi. We have a couple hibachi places here that is absolutely phenomenal. Phenomenal. Love the hat. There it is. See, Mom Bear, told you. You wouldn't have to fill in for long. It's been a while since we wore a hat, man. It's been a while. I figured I'd bring the hat back for a little bit of a appearance. You know what I mean? My kid here, Sabachi. I feel $150 drain out of your wallet. Yeah. Yeah. 4% rate chat. All right. If the rate statement is out, 4%. What was it? Let's see. Statement has come out. Market is moving and grooving, baby. Moving and grooving. Rate cut has come in as they expected it to. Market moving and absolutely grooving. Fly high, baby. Fly high. The real movement is going to be when Powell comes up. That's when we're really going to get some volatility, I feel like. Buy the rumor, sell the news. Yeah, I mean, very well could be. I mean, think about chat, like the rate cut has been priced in. Like we've known this is coming, right? We've known that the rate cuts are coming. So why would the market fly off rate cuts alone? You know, like we knew it's coming. It's been getting priced in the market. So are we really gonna fly high off that? I mean, I guess we could, maybe. But I feel like the market's just known this, you know what I mean? Trader's Nest, good afternoon. Good afternoon. As a reminder, chat, we are going to do a giveaway today. So like I said earlier, we got some more people in here, so I'm going to repeat myself a little bit. You guys are going to get a lot of me today. We are going to be live pretty much all the way through the close. We're going to be listening to Daddy Powell here right on this channel, on this live stream. We're going to listen to him flap his gums. And then after that, we're going to hang around through the market close because we have a big time earnings, baby. Big time earnings. We've got Meta. We've got Microsoft. We got Google. Big time earnings coming through. So we're going to hang around and watch the earnings as well. And then chat, if you're not subscribed, make sure you subscribe because you're going to want to catch this. This is going to be important. I mentioned the free masterclass or free day trading course that I'm putting up on YouTube, right? Absolutely free. But each lesson that we do, we are going to do it live here on YouTube. So today at 6 p.m. Central Time, we are going to do the first episode of that free trading series, that free day trading course series. Okay. So we're going to be live at 6 p.m. Central Time doing that. You're going to want to be subscribed. You're not going to want to miss it. It's going to be an absolute heater all day, every day, baby, all day. So hit that subscribe button. Also, Tradeify is running 45% off right now. Straight to fund is 25K, 50K, 100K. Holy. Go JM. All right, a little bit of selling here on the NQ. Nothing too crazy. Nothing too crazy. We're still kind of just in this range. Haven't really gone anywhere. I imagine that the market will be waiting for Mr. Daddy Powell to come out and start wreaking havoc on everybody. The most expensive good afternoon you will ever hear in your life. It's going to be a good one, chat. It's going to be an absolute good one. And then obviously today at some point, we're going to be doing a giveaway. So I hope you've got your ducks all trained up and ready. Still got a little bit of selling coming through here. Little bit of selling. Market selling a little bit. We'll see if we get a little pop below those 200s there. Maybe we do, maybe we don't. So far, those 200s holding strong, holding strong, holding strong. Definitely catching a nice little bid off those 200s. MH, how are you? Business Lens, what's up? How y'all doing, man? How y'all doing? How y'all doing? How y'all doing? Mario's in the building. What's up? How you doing, Mario? Oh, Chaz, my Chipotle here. Oh, baby, it's coming up. My Chipotle is almost here. Bond says, pump it. Let it fly, baby. Let it fly. Pump it up. Chat, who gonna pump the market, bro? Who gonna be the one to pump it? Who's gonna be the one to pump it? Let's see if it flies or if we absolutely sell back down. I will be screen sharing the meeting. Yes, we're gonna watch the meeting together. All of us here, we're gonna hold hands, have a bonfire, and watch Daddy Pal speak to us. Y'all down for that? That sound good to everybody? Nice little pump back to VWAP there. Gonna get your bucket of popcorn. I love that. I really do. I love that. I love that. I love that. Make sure to put extra butter on it. Extra butter. We got about 22 minutes until Daddy Pal comes out and starts speaking to us. Wonder if the market is going to move. We did get a test of VWAP there. So we'll see if the market decides it wants to move at all. If not, it will probably wait until Daddy Pal comes out and starts talking. We'll see what color tie he's wearing, because that'll give us kind of an indicator on how he's feeling. The tie indicator, you know what I mean? Purple as always. Who knows, man? He might have woke up on the wrong side of the bed, just coming out and just want to just wreak havoc on everyone. You know what I mean? So we'll see. It'll be interesting to see how he's feeling today. Market's kind of just chilling here in the 40s and 30s. Still getting a little bit of selling pressure coming through. We'll see if it holds this level and goes back to VWAP. I feel like if we go back to VWAP, chances are we probably push through it, but so far sellers have been trying to hold us down a little bit here. Trying to hold us down. YM did something I haven't seen before during London. It moved 100 points in a 1 minute candle. Holy. I'm glad you caught that long. My goodness. 100 points on a 1 minute candle? That's Nasdaq temperament. That's how the Nasdaq likes to treat us. Holy. Nasdaq kind of just consolidating here, trying to make up its mind. We'll see what we do here. Kind of still just hanging out under VWAP. We'll see if we do get any sort of pop above. Again, I feel like if we go test VWAP again, probably get a nice little move above it. But we'll see. We'll see. We got Daddy Pal coming out in was it 10 minutes or no 19 minutes? 19 minutes till Mr. Powell comes out. Nasdaq trying to get back to VWAP there. So far, unable to. We'll see. Can she get back to the VWAP ski? Also flirting with IB low there. So a lot of resistance could be at this level. We got IB low, we got VWAP. There's a lot there, but we got to be careful. A lot there we got to be careful with. Oh, is my Chipotle here? Hold on. I think my Chipotle is here. I've been watching it on the map. Yeah, Chipotle is here, chat. Be right back. Alrighty. Well, we got gold dropping. Uh-oh, let's take a look. Is gold dropping? Yeah, a little bit. It's flirting with 4,000 here. Flirting with the 4,000s. Could we get a drop here on gold? Could get interesting, chat. Nice little drop on gold. Man, we had to go pop. Got to hold below 4,000s, get down to the 392s and run all that. Could be nice. Got a long ways to go for that. Going long on gold? Oh, baby. We'll see what gold brings out for us. Gold is catching a little bit of a bid. Little bit of a bidski on gold here. Retesting 4,000s. We have about 14 minutes till Powell comes out. We are retesting 4,000s on gold. You want Powell to curse everyone out? Holy. All right, is gold gonna hold above 4,000s, or are we gonna stay below, chat? We'll see. Daddy Powell will be coming out soon. About 13 minutes till we got Powell. 13 minutes until Powell. Gold is trying to hold a bid here. Be funny if it comes out in a red tie. Oh, the market will go in absolute turmoil. The market will go into the absolute ground if he comes out in a red tie. Like, that's just game over. Red tie, it's over with. You know what I mean? It is absolutely over with if it's a red tie. If it's anything but the purple tie, we're in trouble. Has anyone ever spread traded indexes against each other? I usually don't. I'm sure there are plenty of people that do, though. Plenty of people that do. All right, sellers still trying to come back in on gold. Be interesting to see if we can get back down in the low 90s there. But so far, it's kind of a tug of war at this 4,000 level. Like, are we going to hold 4,000? Are we going to sink? Are we going to wait till Powell comes out? There's a little bit of a bid. It's going to get interesting. Going to get interesting. Gold is trying to hold a bid above 4,000s here. You don't like hedging? Yeah, I don't really either. It just feels too risky for me to do or try. It is an absolute tug of war of 4,000, chat. Absolute tug of war. There is a duck race today, yes. Gold still trying to catch his bid. $4,000 lying in the sand. Just one duck race? What, y'all want more? Y'all want multiple duck races? Holy. Any trades you took today? Nope, I haven't taken a single trade today. Not one. And I'm proud of it. Proud of it, baby. Don't intend on it either until we get Daddy Pal coming out. Daddy Pal got to come out and wreck everybody. Or long gold. What's your entry? Gold is trying to hold a bid at 4,000. I mean, it's really a tug of war here at 4,000s. It really is. $4,000s. That's where you try to be still working on FOMO. On FOMO emo trades, blowing up accounts that it now hurts. So hopefully I get out of school soon. Oh, you're forever going to be in school. Forever. That'll never go away, baby. Never. Never, 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 never. No, gold getting more selling here. Gold getting a little more selling. Quite a bit more selling. We might be coming down to those 92s. This continues. Does gold fall off a cliff? Also, with rate cuts, does it make sense for gold to fall off a cliff, chat? What do you think? Gold is really, really dumping. Really dumping. Falling off an absolute cliff. Falling off an absolute cliff. My goodness. Gold. Does the cliff keep clipping? Day is loaded. Yes, it is. The day is absolutely loaded. You're short gold? Oh, baby. You are mega in the money. Mega, mega, mega money. Holy. You'll love to see it. Hat today, hair must have messed up. Yeah, chat. I had a bad hair day today, bro. I had a bad hair day. Leave me alone. Oh, Mama Bear got 7 points in the Tradeify Duck Race account. Now over 2,000. Going to pass it next week. Let's go. Holy. Comes some more buying on gold. Do we go back to 4,000? Back to 4,000? Holy, what a buy up. It's getting a little spicy, chat. Like this Chipotle. Mario says, she just reminded me of past mine, haven't traded yet. Holy. I know I got beautiful hair, chat, okay? I know I do. But it can't be perfect every day. So some days I gotta wear a hat, you know what I mean? What up, G-Man? How you doing, bro? Who will be the first to get a payout from a duck race account? Ooh. I would love to see that happen. I really would. All right. We gotta pull up Pal. Daddy Powell on the way. It's a purple tie. There it is.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Chat, can y'all hear it?
Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 3 3/4 to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted, Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1. Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standard
Gold catching a
repo
little bit of
facility.
selling here.
In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet, and will reinvest the proceeds from those securities in Treasury bills.
A lot of selling,
Furthering
holy.
progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Here come the questions.
Nick Timmeros of the Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook, or could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way I've been thinking about it is the risks to the two goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw
Gold still trying to catch some selling here.
Job creation. We saw a very different picture of the labor market, and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, others people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
Claire.
I'm Claire Jones, Financial Times. Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
You know, I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. You know, I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And, you know, some will be more averse to inflation overruns, and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when more participants go out and talk, they're very disparate views. And they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, that we haven't made a decision about December. I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, what the place we're trying to reach. What we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few dollars, because again, the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Colby.
Thank you. Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second-round effects from tariffs?
Yeah, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, that would certainly play into our decisions going forward. So, we do have, we get some data. The labor market is a place where we get For example, we get the state level data on initial claims, which are sending a sort of a signal of more
Gold
of the
catching a
same.
little bit of a
we
bid
also
here.
Get, job openings, and we'll get lots of survey data. We'll get the beige book and things like that. So we'll have a picture of what's going on in the labor market, and the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So we get like I mentioned what we get in the labor area. We get some data in inflation, some data in economic activity. And we'll have a picture of what's going on. We also will have the beige book again. I would say we're not going to be able to have the detailed feel of things. But I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this.
Yeah, remember we
So,
have
in terms of how it might affect
earnings that we're going to be
December,
covering
it's
as
really hard
well
to say.
after
December's,
this
just the meeting's
into
like
market
6
close.
weeks away.
So we'll be
We just don't
covering
know what
those.
we're going to
We are
get.
doing a giveaway today as well, so stay tuned for that.
If there is a very high level of uncertainty, then that could be an argument in favor of caution about moving, but we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had two dissents, one for 50 and one for no cut. So, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool.
Yeah,
And
G-Man, they
again,
dropped it.
people
It's
have
4% now.
They have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop it, the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what, in the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities. And we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
John L.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So, okay, so the September CPI report, we didn't get PPI after that, which is important for translation into what we
Gold
look
kind
at,
of
which is
hovering in
PCE
these
inflation.
60s here, chat.
But we can still make a
We're
pretty
going to
good
way back to the
assessment of what that
70s.
will be.
Potential bid
When we
on
get
gold.
PPI, there might be
I don't know. It's kind of an interesting level. A little bit of a tug of war down here.
You know, it was a little softer than expected, and we always break it down into the
See
three
if buyers
components.
want to
So
hold that, or if we do see a little bit more selling there.
You've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's been doing that for some time, and we expect to continue that. That leaves the biggest category is services other than housing services.
We do have
And
duck
that's kind of
races
been
later,
moving
chat. We
sideways,
are doing a giveaway
over the last few months, but a
for a free
significant part
Tradify
of
account,
that
growth
is,
account.
non-market services, and we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be, 5 or 6 tenths, and so that, if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. So that we look at that, and the thing about tariff inflation is the base case is that it will come, and it probably will increase further, but it is that it will be a one-time increase. And we've been very focused for all of this year at making sure that that's the case, and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, a really tight labor market. We don't see that. Another
50K chairs, Ness.
inflation expectations moving. We don't see
50K,
that.
50K,
So I
50K.
think, we're watching this very carefully. I
50K
think it's-
growth account.
It's not the case that we're just assuming that it's
So
going
hope
to
you
be
got your
one-time
ducks ready.
inflation. We understand fully that this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that? And especially when we're seeing potentially labor supply challenges?
Sorry, say that first.
The stubborn services inflation that you mentioned.
Services inflation, yeah. Well, again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed.
Gold really just hovering in these
actually paid
60s,
is a big
70s.
part of that. But also
Low
just,
70s,
we
high
think
60s.
policy is still modestly restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market, is because the Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that's a credible commitment, and there should be no question that that's where we're going.
Chris.
Great, thank you. Chris Rugaber at Associated Press. So there's a big investment boom in AI infrastructure right now, as you know, and wondering if the existence of such a boom would indicate that rates are not that restrictive after all, and could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles? How is the Fed thinking about that?
So I don't think that you're right. There are a lot of data centers being built, and other investments being made around the country and around the world.
Electricians
big
for
US
data centers are gonna be the
companies
next millionaires, bro. Trust me
just
on that.
investing a lot of resources.
If you're an
in thinking
electrician,
about how
bro,
AI,
start helping with AI.
which will be based on those data.
You're gonna make a lot of money.
Data centers is going to affect their businesses, so it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run. It's longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up, could you mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense, I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data? Thank you.
So it's a lot of things, and it doesn't replace government data, but you know all of these. I'll just mention some of the many names: Price Stats, Adobe, and others.
Nice, Mario.
For wage inflation, there's ADP data. On spending, you're going to ask about spending at some point. There are lots of other things that we look at, but it's many different sources, and again, including what we get out of the Beige Book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Howard?
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about the continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys or the Beige Book, do you worry at some point you're going to have to start making policy by anecdote?
This is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that. What do you do if you're driving in the fog?
Gold
You
just
slow down.
catching a nice bid.
That could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
As a follow-up in the debate on this meeting, we saw recently some pretty big layoff announcements coming from Amazon and others. Wondering if that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it, household health premiums that are going to possibly be going up quite substantially, things like that. Has that started to become a factor in your policy discussion?
So those are both things that we're watching very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do. So we're watching that very carefully. And yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are, if you listen to the earnings calls or the reports of big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower cost products, but that at the top, people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there.
Edward.
Thank you. Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, he said, far from it. So if a cut might not be on the table for December because of lack of data,
Gold catching a nice
what
pump
other
here.
concerns then stem from? So if it's not lack of data as the reason December is not a foregone conclusion, what other things could be the concern then?
Well, the perspectives of people on the committee that, we've now moved 150 basis points, and that we're down into, you're into that range between 3 and 4 where many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that's you can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether in fact the growth that the stronger growth that we're seeing is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis points in the last 2 meetings, and there was a sense like, from some, let's pause here, kind of thing, and a sense from others wanting to go ahead. But that's why I say differing views, strongly differing views.
Yeah, so on that division then, you're talking about going forward. So what's more important in this division? Is it inflation risks? Is it employment risk? Or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that. And as I mentioned, some of that is different forecasts, but a lot of it is also different risk aversions to the different variables, which is common through all Federal Reserves. People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to from my colleagues. And so we're at a place now where we have in fact cut 2 more times. And we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes. And I'm just telling you that's what happened in the meeting.
Elizabeth.
Thank you so much. Elizabeth Schulze with ABC News. What is your explanation for why the job market is weakening right now, and what will this rate cut do to improve the job market?
So I think there are 2 things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's 2 things. That's declining labor force participation, which is a cyclical thing, and then there's declining immigration, which is just a big policy change that actually began in the last administration and it has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and the unemployment rate has gone down, meaning that demand for workers is going down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand, and I would just say when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work, is pretty close to zero. So maximum employment doesn't, on a sustainable basis, doesn't, if you're creating zero jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last two meetings, that it was appropriate for us to react by supporting demand with our rates. And we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative.
Really
right now,
watching
but they're
gold.
meaningfully less tight than they were. And that should help so that at least the labor market doesn't get worse.
Gold's
So
moving quite
It's a
nicely.
complicated situation, and some people argue that this is supply and we really can't affect it much with our tools. But others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects, but if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory. This is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level, and then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's I think a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even and it's nice that that prices are not going up as fast as they were, but they're still much higher than they were, and it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Michael Pickey from Bloomberg Television and Radio. Do you have any concerns that equity markets are or are close to being overvalued at this point?
We don't look at any one asset price and say, hey, that's wrong. It's not our job to do that. We look at the overall financial system, and we ask whether it's stable, whether it could withstand shocks, right? So, banks are well capitalized, while some households are clearly under stress. In the aggregate, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto, but nonetheless, in the aggregate, pretty good. And you don't see too much leverage in the banking system or the financial system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not. It's not appropriate. We don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI, of the data center story. I think, people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about, it's not about 25 basis points here or there. We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here to, by lowering rates at the margin, that will support demand, and that will support more hiring. And that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately, lower rates will support more demand, and that'll support hiring over time. And of course, we also have to be careful about this, which is what we've been doing, because we know where inflation is, and we know that, I've told you the story. It's a complicated story, but this is the best assessment that we can make. Because there's uncertainty around inflation and the path ahead for inflation, that's why the pace we're going has been a careful one.
Victoria. Hi, Victoria Guida from Politico. On AI, I'm just wondering, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different. In the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these were ideas rather than companies, and so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and it looks like they have business models and profits and that kind of thing. So it's really a different thing. The investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, is much bigger than that, and has been growing, and has defied a lot of, negative forecasts, continuing to do so this year. Consumers are still spending. Now, it may be mostly higher-end consumers, or maybe skewed that way. But the consumer is spending, and that's a big chunk of what's going on in the economy, substantially bigger than
Still
AI.
poll
You
chat.
can point to growth. I mean, actually, maybe growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped very, very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need for new jobs, because there isn't this flow into the pool of labor that, where people need jobs, because
Who's
there aren't
bullish, who's
those people now.
bearish?
So there's not a supply of workers showing up for jobs. In addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend. So I think you're seeing some softening. The economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown. And of course, that will reverse. But you still got the economy growing at a moderate pace.
Andrew.
Hey there, Andrew Ackerman with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the
Doggish?
data drought.
I love
Does
it.
it make you inclined to
Love
stick
it.
with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. It'll probably be argued both ways, right? But I've said a couple times here that, if you if you really aren't getting information you really don't know, and the economy looks like it's solid and stable and hasn't really changed, there will be an argument. I don't know how persuasive it will be, but there will be an argument that, you slow down when you can't see as far ahead. Others may argue, I'm not sure where this argument will come, but you're perfectly right that you could also argue, well, things haven't really changed, but you might not know that, So I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting we're getting, a better flow of data. But if we're going to have to do our jobs one way or the other.
Okay, I also just wanted to ask a FinReg question. I think several years ago you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since then through various mechanisms. But I look forward to. I know those discussions are really just getting going. They haven't come to the point where they're got a whole plan and that kind of thing. So I really don't have much to say on that.
Brian.
Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor market?
So we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, then again, we didn't get the September employment report, payroll report, but we look at, the unemployment insurance claims, initial claims are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, no story. You can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really any part of the economy is making a significant deterioration. Don't see that. You see more things like I mentioned, though, which is you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up, but job creation is very low. And the job finding rate for people who are unemployed is very low. But the unemployment rate
Nasdaq maybe
well.
rolling over a little bit.
Is a low unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular
that we're
section
thinking
of
of
the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level and that kind of thing.
Nasdaq's seeing a little bit of selling here.
People, we saw this during the global financial crisis and the long recovery. If you have a long period of very strong labor market conditions, it benefits.
Trying to get some more sellers coming in as well.
The last 2 or 3 years of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so, yeah, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. Along with keeping prices stable. Those two things. Inflation also hurts people on fixed incomes more than other people.
Courtney.
Hi, Chair Powell. Courtney Brown from Axios. As you know, the 12 Reserve Bank presidents' terms are up for renewal at the end of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve, each of them and all of them. We're in the middle of that process, and we're going to complete it in a timely way. And that's really all I can say.
Okay, thank you.
Daniel. Daniel Davis, Agence France Presse. You've now had dissents in 3 consecutive FOMC meetings, but in this meeting you had dissents going in both directions, and you've just mentioned there's strong disagreement over the future path of rate cuts. Have these disagreements complicated your role presiding over the FOMC meetings, and if so, how?
I wouldn't say that, no. I think you have to take what comes, and what comes right now is pretty challenging situation where we have, first of all, we have 4.3% unemployment. We have an economy that's growing close to 2%. So, overall, it's a good picture. It's a good picture. But in terms of our policy, we have upside risks to inflation, downside risks to employment, and this is a very difficult thing for a central bank because, one of those calls for rates to be lower, one calls for rates to be higher. We can't do both, so we have to balance the two. And so it's a challenging thing, and as we have worked our way through this process, you would expect.
Do you like that, Javier?
That there would be a range of views across the committee on what to do and the speed with which we should do it, and that's what we have. That makes a lot of sense to me. All of these people are, people who take their jobs very seriously, work very hard at this, and just want to do what's right for the American people. But they have different views on what that is, and it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult.
Hold on, what's the poll
judgments
results?
in real time, and I believe we'll get through this. And
50% bullish, 50% bearish. Pretty split, chat. We are pretty split right now.
It was appropriate for us to be careful about this. I think it would not be appropriate to just ignore or assume away the inflation issue. At the same time, I think the risk of higher, more persistent inflation has declined significantly since April. And if we do wind up resuming rate cuts at some point, we will at some point. I think we're trying to get to the end of this cycle with the labor market in a good place and with inflation, on its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under quite challenging circumstances and doing the best we can.
We'll go to Jennifer for the last question.
Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Both regional and large banks have taken losses on loans given delinquencies on subprime auto loans. JP Morgan CEO Jamie Dimon warned, when you see one cockroach, there may be more likely. I'm curious how the Fed is looking at these loan losses and if it poses risks to the financial system or the outlook for the economy. Is it a warning sign?
Gold is kind of chopping here.
So, we're obviously, we watch these things very carefully, credit conditions very carefully. You're right. You've seen rising defaults in subprime credit for some time now, and now you've seen a number of subprime credit, automobile credit institutions having significant losses, and some of those losses are now showing up on the books of banks. We're looking at it carefully. We're paying close attention. I don't see at this point a broader credit issue. It doesn't seem to be something that has very broad application across financial institutions. But we're going to be monitoring this quite carefully and making sure that is the case.
And then separately, many, you yourself have said that we're in a bifurcated economy right now with high net worth individuals continuing
gold
to
saw a little bit of a sell-off.
with the lower income pulling back. How much of consumer spending
Looks like selling coming back through as well.
hinges on the stock market remaining strong? In some odd way, does the market help keep the economy buoyant?
So there's some relationship there, but remember, the more wealth someone has, the lower an additional dollar of wealth matters. So your marginal propensity to consume declines quite dramatically as you reach levels of stock market wealth. So, the stock market, it would affect spending if the stock market went down, but it wouldn't drop sharply unless there were quite a sharp
Gold getting
drop
some nice sellers coming through
here. In the stock market. People at the lower end of income and wealth have a much higher marginal propensity to consume of an incremental dollar of income or wealth, but they don't have the stock market wealth. So I think it's certainly a factor supporting consumption right now. But and you would see it if you saw a material correction in spending, but it wouldn't be. You shouldn't think that it'll dollar for dollar stop consumption, because that wouldn't be the case. Thanks very much.
There you have it. Powell said, "That's all questions. That's all the time we have for today." Holy chat, what do you think, bro? What do y'all think? Does the market shred or melt or do nothing? What do you guys think? Trades by Judah says crash. Degen says melt. Mom Bear says chop. Miz says economy is fucked. Degen says buyers are weak in gold. Sirpany says no clue. Bielka says chop. Chat is 50-50. Yeah, chat. Y'all are the ultimate indicator. You know what I mean? Chat's the ultimate indicator. Mario says, I don't care. We'll see, bro. We'll see. Tomorrow should be interesting, chat. Tomorrow should be interesting. Okay, so here's what we got the rest of the stream here, chat. We have earnings coming out at market close. We have Meta, Microsoft, and Google reporting earnings today. That'll be after the market close. So we're going to be hanging around on stream waiting for those earnings to pop off. All right. We're going to be waiting for earnings to pop off. So we're going to be here through earnings. And we also have a giveaway today, chat. We're doing a 50K growth account giveaway today with Tradeify. So a lot on the docket. So on the stream. Also, we have at 6 p.m. I'm going to remind you guys, at 6 p.m. Central Time, we're doing the first video of the free day trading course series. We're doing the first video at 6 p.m. Central Time here live on YouTube. There will obviously you will have a recording for it. The recording will be uploaded, but we are doing the first video of it live here at 6 p.m. Central Time on YouTube, all live. So it's going to be a good one. I'm very excited for this. And we're going to keep doing it over, just doing more and more and more and adding. There's going to be a whole playlist. There's going to be a whole playlist on YouTube for this free day trading course. Again, it's going to be an entire series. So it's going to be, chat, it's going to be good. It's going to be really good. 7 p.m. Eastern. Yep. 7 p.m. Eastern, 6 p.m. Central Time. So whatever time zone you're in, just do the calculations for whatever 6 p.m. Central Time means for your time zone. But it's going to be good, man. It's going to be good. But we have earnings coming out. Gold catching a little bit of selling here. Gold catching a little bit of selling. Earnings at market close today. Yeah. Gold really catching some selling here. Are we going to go run the lows? We might be going to run the lows. Chat, what was y'all's biggest takeaway from Powell today? What was your biggest takeaway? Earnings should move the market more than the rate since it was priced in. I agree. I think earnings is really going to just send the market on crack or something. I absolutely agree. What'd y'all take away from Powell? What was the biggest takeaway, dude? December FOMC is going to be fun, is what you heard. I agree. That's going to be an interesting one, just given the fact of what he said. There's nothing concluded on it. They have no idea. Takeaway is December rate cut is not 100%. That's the takeaway. We don't know, chat. We don't know. But then again, do we not know, or do we know? Can we expect them to give us a rate cut? Is the market going to keep pricing in more rate cuts? I don't know. I don't know. What's the Nasdaq doing? Nasty Nas over here doing nothing. Nas just chopping under VWAP. This is kind of a chat. I don't know about you guys, but like for Nasdaq, definitely a lackluster event. I would say gold saw more movement than anything. Gold saw a lot more movement than anything, chat. Gold's fixing to go run these lows. Big wheel when I was a kid, that didn't work out well. It was anticlimactic. Yeah, it was. It was. I mean, like I said, the market really didn't move anything hardly at all. It was really gold that saw a lot of, that saw the better price action. That's why I was kind of like locked in on it and watching it to see if I wanted to take anything. But yeah, gold saw some nice price movement. We're fixing to run these lows here on gold. Definitely looks like it's going to. Gold looking like she gonna absolutely just take her on down. Take her on down, baby. Take her on down. Take her on down. Take her on down. Gold looking a little bearish, chat. Just a little bearish. There it goes, right through the lows. Still say 3,800 so I can load up. Do I think it's going to 3,800? Yes, I think it's going to 2,000. I think gold's going to 2,000. In fact, it's going to zero. It's not even going to go to 2,000. It's going to go to zero. We might see negative 500 on gold. Gold might it might even cease to exist. It may not even be real. That's how low it's going. It's going so low that it's not even going to exist anymore. Did that help, Mario? Did you load up? Gold is a conspiracy theory. It's right. It is. It is 100%. In fact, y'all ever heard of those, the Mandela effect? I talked about it on Tradify stream. If you haven't heard of the Mandela effect, look it up. Gold is the Mandela effect. We all think gold was a thing, but it's not. Just like how all of y'all think that the Monopoly guy has a little monocle thing on his eye, he actually doesn't. It's not even real. But y'all thought it was real. He never had it. Gold is the Mandela effect. Now, some of y'all probably just ran to Google and was like, does the Monopoly guy have a monocle? Some of y'all definitely ran to Google, bro. Guaranteed. My electric bill's a Mandela effect. Yep. The wildest Mandela I've heard is that they don't say mirror, mirror on the wall. It's magic mirror on the wall. No, they fucking don't. It's mirror, mirror. Are you serious? It is magic mirror. That's crazy. It actually is magic mirror. Huh. That's insane. See, chat? I mean, look, Mandela effect, gold. It's not real. Y'all think it's real, but it's not. I've been saying it wrong all this time. Oh my gosh, bro. Holy. Chat, not gonna sleep at night after that one. What the hell? Gold ran those lows and then trying to catch a bid back above here. It's kind of an interesting level on gold. Everything's so sketchy right now, chat. It's just, it's a scary thing, bro. It's a scary thing. Everything is so sketchy. Chat, as a reminder, in here about 20 minutes, we're going to be gearing up for earnings. Meta, Microsoft, Google. Guaranteed the market's probably going to go bananas. Bananas for it. We have a giveaway today. So be ready for the giveaway. Also, chat, we're also 1,000 away from taking another payout on Tradeify. So if we make another 1,000 in these accounts, we will be locked in for another 10K payout. That would be 20K in just around 2 weeks. So we're pretty close. Pretty close. Do I have the 150Ks? No, I use the 100Ks. 100Ks, maybe $700 on a new 50K valuation for FOMC trading 3 to 4 micros. The power of micros are literally amazing. You are absolutely correct. Micros are your best friend, bro. They really are. They are your best friend. You'll never meet a friend more loyal than micros, bro. You'll never meet a friend more loyal. Gold's still selling here. Chat, is gold in trouble? Is gold going to be in trouble? Do we go to 0 on gold in chat? I really hope so. $196 to go. Mama Bear just, she isn't calling it quit. She's like, I gotta pass. I'm gonna pass it today, chat. I'm gonna pass it today. There's nothing you can tell me, chat. Mama Bear, she says she gonna pass the eval today. I gotta pass it today, chat. I'm itching. Say to TVT. Pass trade if I won. Nice. It's easy trading? Hell, let me give you my login. Here, I'm gonna give you the login to my personal account. She says no thank you. What? It's easy. I want a mission to get multiple funded in several firms, max account on each. There you go. I tried that once, actually. I had like max funded accounts on 3 different firms. That's as far as I got. I mean, when you make the market, that should be easy. Yeah, if you're a market maker, trading's easy. You just control the market. You want it to go up, you make it go up. You want it to go down, you make it go down. You want to trap and screw everybody, take the reverse position, then make it go up. Easy, right? Easy. It's not that hard. Market maker Mario's, he's the one that he controls the whole market. He's the one that says and tells what the market to do. In fact, he made the market so much that he shorted at the very top of this candle at 93, and he's still riding it. He got the very top tick and is still riding it. He's telling the market to go to 3,800 in this short. Market maker Mario controls all. You blame Nick for what? Gold still selling. She's got 5 accounts on prop and 1 personal brokerage. That the people that have 20 to 50 accounts make me twitch. The name? Well, yes, but I made you change it. So you can blame me for that. I held you hostage. I said I literally forced you to change it to that. But yeah, Nick gave it to you. Mama Bear, don't get yourself in trouble. Careful. Careful, careful, careful. Hold on, chat. Let me share the link to the stream here, because we are going to be doing a giveaway today. So I want to make sure that everybody has an opportunity to come through and partake in the gives. Both of you gonna hold you to fight. Oh yeah, me and Nick are throwing hands. Me and Nick are definitely throwing hands over that comment. There ain't no doubt about it. Me and Nick are gonna go rounds with each other. For putting ketchup on steak, bro? Who the fuck does that? Who puts ketchup on steak? I'm gonna be on Tradify's live stream tomorrow, chat, and me and Nick are gonna go rounds over this. Rounds, brother. I mean, absolute rounds. I'm a big steak person. And I cook my steaks, chat. My goodness, when I tell you I cook a mean steak, I cook a mean steak. I mean, it is mean, brother. Nice and juicy, warm red, pink center. Seared on the outside for a nice crust. Chat, let me tell you, I make a mean steak. So when somebody tells me they put ketchup on steak, those are fighting words. Medium rare all the way on a pellet grill? Yes. Medium rare is the way to go for a steak. Anybody that eats a steak well done, just don't talk to me. I don't trust you. There's no way you and I could be friends. If you eat a steak well done, I mean, just cooked to fucking death, like it was already dead, and now you're just re-unaliving it, right? Well done, black, brown in the center. You and I will never be friends. We won't get along. We'll actually probably fight more often than not. Guaranteed. Guaranteed, chat. Holy. Should go to jail for putting ketchup on it. Definitely should. I mean, that should be definitely illegal. It should be written in the Constitution of the United States. You should never put ketchup on steak. In fact, just put in the 10 Commandments too. Thou shalt not put ketchup on steak. Put it all in there. Put every bit of it in there. Put every single bit of it. So if I'm a vegetarian, can we still be friends? No comment. Which season of leaf do you like, fall or summer? Oh. Oh, Scorpion, we can be friends. We can be friends, Scorpion. It's okay. Forgive you. I forgive you. Chat, got 9 minutes till market close and we got earnings. You do eat seafood and cook a mean seafood gumbo? Okay, there you go. Now see that I can get down with. I can get down with that. I'll rock with a nice seafood meal. Like some sushi? I'm assuming sushi's right up your alley, because there's no, I mean, you can eat fish, right? Fish, rice, and it's got the seaweed in it, and like inside of it. So I'm assuming sushi is up your alley, right? Am I right on that? Ink, you might take the high up. Okay, so you love sushi, great. All right, see, there you go. There we go. There. Now we can go on a sushi date together. So we could be friends, Scorpion. Ali sushi sounds kind of fishy. Da-dunch. Yo, give me some good South Florida sushi, bro. Oh my goodness. Bro, that South Florida sushi hit different, chat. I'm telling you. It really does. It really does. It hits very, very different, chat. South Florida sushi hits some type of way, bro. Speaking for all the South Floridians that are potentially here, if you are a South Floridian and you're in the chat, I will be down in Pompano, Florida, in February for a whole month. I am escaping the last part of the winter here, which is generally the worst part. Escaping the last part of the winter here in Missouri, and I'll be down in South Florida for a month. So I don't know how many South Floridians we got here, but maybe if we have enough in the community, we could do a little get together. Just fed my dog. She is ready for the race. Holy, you love to see it. You love to see it. We're going to get through these earnings here in about 10 minutes, and then we're going to do the giveaway, chat. So be sure you're here because we got duck races lined up. Oh, so no NYC visit? No, we're going to do an NYC visit too. We're going to do a New York one. I'm just talking about escaping the winter. You know what I mean? Because my wife and I were going to be escaping the last part of the winter here and going to Florida just to be in a little bit warmer weather until March. But I will be back in New York. I will be very soon. My wife and I have been talking about it. We will be back in New York. And so I know we have quite a few people in the community that is in New York. We'll be traveling back to the Manhattan area. And so if I have a lot of people from New York that's there, we will definitely do a get together. Definitely we'll do a get together. Also, chat, as a reminder, just in case some of you guys don't know, I have signed a partnership. It's officially all signed. I have signed a partnership with NinjaTrader. This is nothing prop firm related. Nothing prop firm related. This is purely a partnership for me as an individual trader myself, right? Nothing prop firm related. NinjaTrader and I now have a partnership, and I will be featured on some of their live streams that NinjaTrader does. So if you guys want to catch me on some of their live streams, I will be on there. We're gonna be kind of back and forth on streams, chat. We're gonna have like streams here in the mornings and on Tradeify TV. So I'll have Tradeify TV streams on my channel, and then I will be also on streams with NinjaTrader. So there's gonna be a lot of streams we're gonna be hopping on. So it's gonna be good, man. It's gonna be good. When are you gonna be streaming with them? The scheduler's reaching back out to me. We're gonna get something scheduled and start getting like days set in stone. So it's coming soon. Coming soon. I actually have a call with them tomorrow just to make sure I have everything set up for my account. So pretty cool little update there. Super excited to have a partnership with the biggest futures broker in the space. One of the biggest. All right, chat. So we need to pull up. We got to pull up Meta. So let's get Meta pulled up. There. Okay. And then let's get Microsoft pulled up. And then let's get Google pulled up. And then we'll pull up just the NQ here. So we have Nasdaq here in the lower right. We have Microsoft up here. They're reporting earnings. We have Google down here in the lower left, and then we have Meta up here in the right, chat. So we have all of these pulled up here. I'm not missing one, am I? I know there's other earnings, but the big ones are Meta, Microsoft, and Google, right? Meta, Google, Microsoft. Okay, yeah. So those are the big ones. All right, we got those pulled up. NQ is looking pretty bullish right here. NQ looking bullish. Also, chat, while we wait here the next few minutes for earnings to come out, remember we are doing a giveaway, an internal giveaway with Tradeify. So if you take advantage of the 45% off the Lightning funded accounts with Tradeify, there on that 45% off, send me a screenshot using code JM. That'll enter you for a free 150K straight to funded account. So be sure to do that. That way you can be entered for the giveaway. And then we're going to be doing a giveaway here pretty soon on stream here, chat. So get your duck races ready. Get your ducks ready for the duck race because we're going to be giving away a 50K growth account as well on stream. So we do have earnings pulled up here. We have the companies with earnings pulled up. Can you drop the link again for what? Tradeify? There's a link for Tradeify if you want to buy an account. Thank you, Poppin'. Google. Google's really moving here, chat. Look at Google. We got Google here, Meta here. Oh, I gotta change this to extended. There we go. Let's see. All right. These are all set to extended now. That way. Look at Microsoft, dude. Microsoft catching some big selling on earnings here. So Google's popping, Microsoft selling. Still nothing on Meta, really. Is Meta? Yeah. What's Meta like? Stuck right now? What are we doing? There we go. All right, Meta's starting to move a little bit. Microsoft selling. Google is popping. Google really seeing the buying pressure step in here. Wasn't the Fed news bad? Not really. I mean, the Fed news came in as like expected. It all was expected. I think the biggest thing on the table now is what the rate cuts are going to be in December. That's the biggest thing. All right, so we're just finishing up these earnings here. And then chat, we're going to do a giveaway. If you're not already subscribed to the channel, be sure you're subscribed. We're live all the time. Oh, Meta, look at Meta. Look at Meta. Meta getting absolutely smoked here, chat. Look at Meta. Meta getting absolutely obliterated, chat. My goodness. $44-point drop there on Meta. Getting absolutely smoked. Looking at Microsoft. Microsoft got hit pretty hard too. Google, on the other hand, look at Google, chat. Google is seeing some buyers, bro. Buyers on Google. But yeah, Meta's sinking, chat. It is sinking into oblivion. Looking at almost a 50-point drop on Meta here. Meta is moving and grooving to the downside. Let's see, what has Meta really done? Let's take a look. Let's look at the daily. I mean, Meta's been on a grind up, chat. It really has. Meta's been on a nice little grind up. So earnings today, I mean, even though we're sinking pretty far, we're still pretty up high on Meta. Thank you. Here, we take this. Microsoft not far behind. Yeah, Microsoft is seeing a lot of pressure here. Nasdaq, if you take a look at Nasdaq. Nasdaq is seeing the selling pressure come in, really feeling those Meta earnings and Microsoft earnings. So Meta and Microsoft really bringing down the Nas here. We saw a nice pop all the way up to 380 there on Nasdaq, and Meta and Microsoft earnings are definitely putting a little bit of pressure on the Nasdaq at the moment. I mean, look at Meta here. Meta is just sinking. We went from 756, chat, all the way down to 686. 756 to 686, chat. That's insane. Actually insane. Market Maker Mario got what I needed to pass TBT. That's 3 evals passed a day. Holy, let's see it. You love it. You love it. You love it. Yes, Mario. Man, Meta just getting absolutely smoked. Meta getting smoked. All right, let's look back. So Google is still trying to hold this. Microsoft, look at Microsoft. Microsoft saw that sell from earnings, but Microsoft starting to get a little bit of a bid back. A little bit of a bid back here, chat. We're chasing about 40% there of that move. 35-40% of it. Nasdaq's coming back up to VWAP there. So far, Google is trying to hold its bid. Microsoft trying to move higher again off that. Meta got absolutely smoked. We're seeing just kind of a small little bid here. Probably a dead cap balance on Meta. I would say, well, let's take a look at Meta earnings real quick. See what happened here. Am I tripping? Why don't I see the number for Meta right now? Hang on. Okay, here we go. Meta's Q3 2025 earnings. It actually beat revenue. So Meta actually beat. Well, the revenue was in line with analyst expectations. So really Meta kind of came in line or beat. The EPS kind of fell in line, beat. So the EPS was 6.72, beating the consensus of 6.72. So it kind of came in line. But they're classifying it as a beat. From what I'm gathering. Hold on. Wait, I'm seeing two different numbers here. Hold on, chat. Let me get the real number. Because this is showing something entirely different. The EPS I'm seeing on this side is completely different, chat. Hang on. Somebody's got a number wrong. Somebody has their number wrong. Yeah, I'm showing that they beat. That's weird. Anyways, Meta still seeing a little bit of kitchen kind of like dead cat bounce here. But looking at Nasdaq still selling off a little bit, Microsoft still selling a little bit, Google is kind of holding its bid, trying to hold its bid a little bit. So it's interesting, man. It's interesting. We'll see how tomorrow plays out for these companies. Chat, y'all ready to do a giveaway? Who ready to do a giveaway, bro? Talk to me. Are we ready for a giveaway? Who wants to win a 50K growth account? Who's gonna win it, bro? Give me my fix. Chat, let's get 10 more. Let's get 10 to 15 more likes on the stream and we do a giveaway. 10 to 15 more likes, chat. We'll do it. I'm keeping you at work. We just need a few more likes and we'll do it. A few more likes and we run it, chat. A few more likes. Let's see if the drugs I gave my duck helps me win. Oh, do I need to start drug testing ducks, bro, for performance drugs? Are we got to do drug tests on ducks, bro? All right, there we go. We got it. You gave yours NAD? Yeah, I'm on NAD every day. My dog never gives a fuck. I take NAD every day now, bro, and it's life-changing. It really is. All right, let's do the giveaway, chat. We got the likes. Let's do a giveaway. We are doing a 50K growth account giveaway with Tradeify. Here's the keyword, chat. The keyword for the giveaway. I'm gonna put it in the comment section here. Because we had interest rate cuts and we had Daddy Powell coming out to speak, your keyword is gonna be all one word, JPOW. Put it in the comments there. There's your keyword for the 50K growth account with Tradeify. Good luck. While y'all are putting that in there, reminder, we're going to be live again today at 6 p.m. Central Time, chat. 6 p.m. Central Time, we're going to be live again. And we're doing the first video of the video series for the free day trading course, okay? It's all free. It's all going to be put on YouTube. Every single bit of it's free, all right? All on YouTube for you guys to look. And the things that I'm going to be putting in this course are things that traders, course coaches, course creators, they all charge thousands of dollars for, right? And we're going to give it all away for free. Absolute free game, right? 6 p.m. Central. We're going live right here on YouTube to do the first video of that series, right? So if you're not able to attend it live, then you'll be able to catch the uploaded version of that class, of that lesson, okay? And there's going to be a playlist. So if you go to my YouTube channel, you'll notice playlists. So I have one playlist on there already for all the master classes that I've done. So if you want to go back and rewatch any master classes, you can go to that playlist. But there's going to be a new playlist created for this free day trading course, okay? You're going to want to be there. So be sure to hit subscribe to the channel. That way you guys catch all these video lessons, because you're going to want to watch it. We're going to kind of lay in the first few videos, we're going to kind of lay the ground rule, lay some foundational stuff at first, right? But then as we get deeper and deeper into the course, there's going to be more technical, more psychological things that you guys can learn while going through this. And so it's going to be instrumental. Trust me, it's going to be instrumental for you guys. And it's free. So make sure you are subscribed if you want to catch those. Mama Bear's $13 away to pass. Mama Bear just was relentless. She said, fuck discipline. I'm passing it today. She said, we passing the eval today, brother. Discipline goes out the window. Mama Bear over there itching to pass this account, bro. She's over there tweaking. She's like, I'm gonna pass account today. I'm gonna pass account today, chat. We're gonna pass it. We're gonna pass it. Anybody gonna pass it with me? Mama Bear, love you. You gave me shit earlier, so I gotta give you shit now. It's only fair that we mutually exchange shit, you know? Mama Bear has joined the gold gang train. Holy. Chat, I'm gonna give you guys like 30 more seconds to a minute. Type JPOW in the chat if you have not already entered for the free 50K growth account in Tradeify. In the meantime, let me get the duck race pulled up. While I pull it up, chat, also as a reminder, TradeFi is 45% off straight to funded accounts right now. 45% off straight to funded accounts from the 25Ks to the 100Ks. It's all 45% off. Even though we're about to do a giveaway right now, there's another giveaway you can partake in when you use code JM at TradeFi. All you got to do is send me a screenshot and that'll enter you for the 150K straight to funded account giveaway. 150K straight to funded account giveaway, right? When you use code JM at TradeFi, and all you got to do is send me a screenshot of it. And you get multiple entries. So if you buy 5 accounts, you can have 5 entries. If you buy 100 accounts, you get 100 entries. When does it drop for that? We do them at the end of the month. So to enter this one, you have until the last day of the month. So was that 31st? Yeah, 31st. So you have until Halloween. 31st will be the last day for that giveaway. Dee says, hey there, I was wondering if you were in need of a video editor. I mostly make YouTube. I had video editors before, but honestly, I found that the more natural raw content for my stuff just works better. It really does. I don't need the heavily edited stuff. I feel like I just get better, better engagement, more views. People relate more to the authenticity. So the heavy edited stuff, I just feel like I don't need it anymore. All right, chat, y'all ready? Everybody entered? JPal in the comments if you haven't. Everybody entered? 50K giveaway, 50K growth account giveaway. Still see some people entering. Looks like, yeah, we saw participants numbers going up. So I'm gonna give you guys literally like 15 more seconds, bro. 15 more seconds. And we're gonna run it. Remember, if you're not already subscribed, I gave you all of the reasons why you should be. Free course material, live on YouTube, daily live streams. All right, here we go, chat. Here we go, here we go, here we go, here we go. Let me take myself out of it. All right. Chat, y'all ready? Listen. I say it over and over again, chat. I really do. I say it over and over again. This is where Mama Bear passed. Love that. Holy. Now watch her win this growth account. GG's, Mama Bear. I say it over and over again, chat. This is where preparation meets opportunity. You know the deal. Preparation meets opportunity, baby. If you didn't train your ducks, I don't know what you're doing. I don't know what you're doing if you didn't train them. Better have given them food. Better have given them all the performance drugs that you could have. Because this is it, baby. This is it. 50K growth account with TradeFi. Let's go, baby. Good luck. Good luck, good luck, good luck, good luck, good luck. We got Edge Engine coming out the gates. Tail feathers firing away, bro. Holy. Trader King. We got Joyous. We got Knock. We got Trade Tactics. Brendan Burkhead. Chris Gandy. Holy. Gandy, 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 Gandy. We'll just play baseball with a Gandy. Are you the same Gandy? We have Trader's Nest. We have Andrea. We have Trader's Grind. We have Ms. Venture. We have Volatility Vaults. We have Sean King. Sean King, you're falling off, bro. What happened? Tail feathers fall off? Trader Crest. Trade by Shazagababda. Wick Hunter. Andrea Ladicho. Traders grind. We have resilient trader. We have liquidity legend. Knock is coming back up with the lead here. Knock trying to shake the tail feathers, get back in the lead. Holy. MH, Mountain Home. MH, looking like a straight up bumblebee. Holy. Miss Venture. We got G-Man. Uh-oh. Uh-oh, who's it going to be? Oksano. Oksano is trying to take the lead. We have Quick Futures. We have Work. Frenzy Scalping. Holy. We have Consistency Counts. We have Traders Grind. Ignite Income. Holy, who's it gonna be, bro? Who's it gonna be? We have an absolute close one, chat. It's Any Ducks Race. Shake your mother freaking tail feathers, bro. Holy. I need to play that Nelly song, Shake Your Tail Feather. Need to play that during the duck race, chat. It only makes sense. We have 5 seconds left. Trader, chat, you can't let Trader 007 win. He wins all the time, chat. You can't let him do it. Trader 007, bro. I'm convinced. It might be rigged. Chat, it might be. I don't know. I don't do the rigging, okay? This is like the third one that Trader 007's won. Chat, I don't do the rigging, okay? It might be rigged, but I don't do it, okay? I don't do it. I don't do it, bro. I really don't. We need an FBI investigation. Bro, it's not my fault. It's not my fault. So, I'm telling you, Trader 007 knows how to train the duck, bro. I'm telling you. Trader, I don't know what kind of outfit you picked for this duck. I did not the outfit that I would have probably chosen. But listen, I don't know what you do with your ducks. But for this to be like the third one that you've won is quite impressive, bro. I'm not gonna lie. I'm not gonna lie. Anyways, chat, remember, we will be live again later on this evening, 6 o'clock Central Time, 7 p.m. Eastern Time, whatever o'clock in whatever time zone you live in. Be sure to do the conversion there. So 6 o'clock Central Time, chat, we will be back. We will be doing the first video of the video series for the free day trading course live on YouTube right here. You do not want to miss it, chat. With that said, bro, listen. I'll see you guys here in a few hours. You get more Joey, baby. More Joey here in a couple hours, chat. Stay beautiful. I will see you guys here pretty soon. Bye. Love you.